Happy Wednesday, everybody, and welcome to another episode of Coast to Coast Lifestyles with myself, Heather Kusiba, and with Windermere Real Estate on Seattle's east side, and Cassie Webb with Elevate Real Estate on the Mississippi Gulf Coast. Today, we're going to be talking stats and just kind of how our stats are looking like for June. So, I'll have you go first.
All right. Yeah, for July. We're going to look at July.
Oh, yeah, sorry.
And then, yeah, I know, but you know what? July went by so fast. I feel like we should be going over June stats instead of July. But anyway, yeah. So, and then what we're also going to do is look at, I wanted to kind of just show you, I guess, a little more comprehensive view of the market where we're at right now, kind of looking at this year as opposed to last year. And kind of, we did kind of a mid-year check-in, but just with a little bit of different perspective and reporting today, and where I think the opportunity is right now. So here we go. Give me just a second. I'm going to pull up my reports here. So first, I wanted to show you guys, so this is our pending sales. And we are talking about kind of appreciation, which, spoiler, we're pretty steady with where we were last year. But I thought this was very interesting because we always look at this data a month, when the month closes out, then obviously we're looking at the past activity. And that's one of the challenging things always with real estate is we're always looking at what just happened. And then all we can do is kind of make educated guesses on what's going to happen moving forward. But when we're looking at July, that's our last month that's closed out. Pending sales were 617. So we've actually had the highest number of pending sales this month that we've had in a very long time. And when we're looking back, let's see, July of 2023, of course, with the interest rates, it had taken a huge dip in pending sales and then had started to kind of rebound. What I thought was very interesting, I wanted to kind of follow through with this, is December of last year, right about the time we were given our predictions, Heather, I think, we had a big dip, and you can actually follow that when you're looking at our closed sales. Of course, typically they close the following month. We had a huge dip in our closed sales, which is completely logical, right? Because it follows the pendings from the month before. And when we're looking at the sales, I do want to look at this year versus last year. But I did want to point out there was a big dip in January and then it rebounded. But point being that, it's when we say, hey, there was a big area of opportunity in December, obviously, to go under a contract and close in January. But then the very next month, it went higher than it's been. Let's see, 250. It went the highest that it was in an entire year, with the exception of May of last year. So I think there's a saying that says like time in the market versus timing the market. And I think that's the story we see here. Like, for you to get into a house at what may be the best time for you may not be the best time for everybody else, such as apparently January of 2024. That can be a huge area of opportunity, but typically getting in the market where you can see that like the market dips, but then it comes back up. And that's where we are right now. So looking at July of last year, we were actually at 245. And July of this year, we ended at 240. So we're actually pretty much right on track with when, obviously these are median sales prices. So that doesn't mean, you can have sometimes some data that kind of makes that go up or down a little bit. But overall, I mean, our values are staying pretty steady, ups and downs, but we're pretty on par with where we were last year. That being said, what we are seeing with some of our, I guess, lack of appreciation, because guys, we had a few unicorn years, but it's not normal for you to be able to buy a house and a year later sell it for a profit, unless you live where Heather lives. It seems to be normal there for a long time. But that is not typical of real estate. Typically, your appreciation is going to be slower over time, which is why you really want to look at if you may need to sell and you may need to sell all of a sudden right here or right here. That isn't, it may not be, if you have a very specific narrow window of opportunity and you're not open to using it as a rental, that's definitely a conversation to be having, when you think that you would be able to sell it and at least break even. So what we're having right now a lot is people who maybe bought a year ago, or maybe bought, a little over a year ago, and they don't have the appreciation yet to be able to sell it and pay closing costs and commissions and all that good stuff. So we're starting to have a unique situation where basically our number of homes for sale is starting to kind of stack. So this is good news for buyers. We are right now, even with our increase in inventory, like literally we went from 1,300 houses for sale in starting the year off last year, and we're up to over 2,100 for sale right now. So you actually do have a few options as opposed to like last year, a year plus ago, when you were like looking for homes for sale and you're like, there's literally nothing out here and I'm gonna pay all my closing costs and all this stuff, right? And so I think buyers are in a good position right now. But the talk of the week in real estate has been interest rates have went down an entire percent, and things are actually, people are starting to really take note. I saw for a 15-year mortgage, granted, but I saw a rate in the 5%. We've got some new home construction that is offering 3.99, 4.5%, 5%. Those types of things, which can be a great option for people. But as interest rates go down and buyers start entering the market, all that is going to likely go away. Home values are going to jump, and our inventory is still at 4.3, which is the highest we've seen in a long time, with the exception of last month. But that's still technically balanced / seller's market. So I think what we're going to see as these rates probably will level out a little bit and maybe dip in September is what they're predicting. I think that it's not going to take long and this inventory is going to get back down to a for real seller's market with tons of buyer demand. And so I really think that now is a great opportunity for buyers to go ahead and get in the market, not be competing with as many people as they very well may be in the next few months, and have that bigger selection of homes to start getting some of the features that they're interested in. And then if interest rates go down substantially, you always have the opportunity to refinance. And at that point, be in a very comfortable monthly budget. If you could buy right now and it'd be doable, plus likely a tremendous amount of appreciation. So I think it's a really good opportunity right now. And I really encourage people to consider buying now instead of waiting until the interest rates drop. I think it's going to be a super competitive market, and not the favorite time to buy a house. I think it's going to be worse than it was when you couldn't even look at a house. You just had to write an offer without seeing it. Is what I think will happen, just because we have so much pent up buyer demand and not a ton of inventory. So Heather, tell us what you got going on over there. I'm very interested to see how they compare. We're in very different markets, so sometimes it's drastically different, and sometimes we're seeing a lot of similarities. So, what you got?
Yeah. For sure. Well, firstly, I apologize. My internet dropped in the middle of this, so I might repeat some of the things you said, but I am working from my phone now. I have the stats on a different screen. But generally, I do start off agree with what you were saying at the end there. Like, once interest rates drop, it's going to get busy. It's going to get crazy, and it's going to very much be a seller's market. So right now is really the best time to buy before the craziness ensues. So just want to put that out there. So that is a big similarity between our markets. But other than that, so when I'm looking at July stats, we actually ended up remaining steady on our months of inventory. We have 1.2 months right now, which what's really interesting is in our area, we almost start treating it like a balanced market once it's over about a month and some change. Just for some reason, the way it's mostly been since COVID, but the way that it's processed over here, if your place is sitting for more than a few weeks, you have failed with your listing and people freak out. You haven't really failed. That's just how it's processed, which is really interesting. So we have 1.2 months of inventory, which doesn't sound like a lot, but for us, it kind of feels like a lot with a lot of our recent stuff that's been going on. But what's even more interesting, and this is something you might have covered, I'm not sure, but there's been a lot of uncertainty in the housing market right now because of the interest rates. So usually, historically, what we see is the market starts ramping up and becoming more busy in usually post Valentine's Day-ish timeframe. And then once usually about May hits, suddenly we start seeing a massive ramp up of homes on the market, buyer activity. It just gets really busy. And it pretty much stays that way through part of August, and then it will start to teeter. But this year, we saw kind of the opposite. We saw actually our busiest times earlier in the year, in like the March-ish timeframe. And then once summer hit, we're getting a lot more unease with buyers, and we're continuing to see very little inventory, but we're also seeing a hold off on buyer interest and a hold off on buyers entering the market. So for example, last month in June, we saw a median closed sales price of 1.635 million. While in July, we saw a median closed sales price of 1.62 million. It's not a huge difference, but it's still the opposite direction of what we kind of expect this time of year. And then with year-over-year appreciation, in June, we saw 13% year-over-year appreciation, while in July, we saw 8%. Again, still not bad numbers by any means. If you bought this time last year, you are still way, way ahead of anybody who hasn't purchased. But it's just interesting seeing that shift downwards instead of upwards because of all the uncertainty that's going on. Also, as you might remember, we see a lot of multiple offer situations around here. So, for example, in May of this year, we saw 58% of all offers being multiple offer situations, or at least sold above list price. And then in June, we saw 50%, while last month in July, we saw 43% go over asking. And that's by a median percentage of about 5%. Which is also down from the 8% we were seeing in May. So it's, again, it's just trending in an interesting direction. And a lot of that really is just due to uncertainty. And especially with interest rates currently dropping, like we're at the lowest now than we've had for over a year at this point, right? Mm-hmm. And so even with that, we're not hearing a heck of a lot of buyers jumping yet. They're waiting to see if it will continue to go down. But the problem with that philosophy, as you've already touched on, is you're waiting for them to continue to go down. So is everybody else. Mm-hmm. So I don't know how it is with your area, but with our area, a stat that I heard is that for every 1% of rate drop, we're seeing roughly a 10% increase in home value. Mm-hmm. So it's better to, if it's within your capabilities, it's better to buy when interest rates are high and other buyers are nervous, because you get a lower home payment. And then once the market becomes crazy because interest rates are lower, you have an opportunity to refinance. But you're not paying for more house, you're paying for the same amount of less value, right? So it's just super interesting seeing how the market's reacting to everything, seeing what all of the uncertainty is causing. But yeah, I guess that's just kind of a overview of mine.
Yeah, well, I love it. And then I think, nationally, obviously, we all have an election coming up, right? And that always just kind of adds to the uneasiness, regardless of your political persuasion. And then we've got the dip in the interest rates. I'm very interested to see when we're looking at next month's stats, like what effect did that have? Because I think that more buyers are starting to consider and enter the market than we're realizing right at this point. So it'll kind of be like when we looked at a few minutes ago when we're looking at December. What a great time to go under contract in December, but we don't know that until after the fact. Very interesting to see how that plays out. And then if interest rates do dip again in September, because I think it was this week, they hit the lowest since they spiked. So we definitely expect to see a response from that. And we're actually starting to see some refinances and stuff that we haven't seen in a long time. So it'll be interesting to see how the next few months, but I do know that there's a huge area of opportunity right now. And I do think that that's going to be very short lived, but we're only going to know in hindsight, like, darn, I missed the boat. Like now the interest rates are low. I can't find a house. The inventory is super low, and the prices have went up. So we'll see how the next few months goes. But I'm excited to share it with you guys. And if you're thinking about buying or selling, definitely reach out. Let's have a conversation and see. We can talk broad all day long, but it really is a great to have an individual conversation based on your needs and goals and see what makes sense for you. So we will see you guys next week, same time, same place.